Well, good morning, everybody. Welcome back. We got a pretty active live open today for you. We've got everything from crypto to the British pound in view. We've got a few numbers coming out. We got consumer confidence coming out. We got Jay Powell speaking at the crypto symposium. So really a lot going on today. Nick, what are you looking at?
Yeah, I mean, it's been a fantastic morning today in Europe for various reasons. We had a lot of detailed stuff talking about the pound this morning, but it has been just a bit quieter. And to be honest with you, that feels like it's been a bit of a relief, to be honest, given how active things have been over the last, I don't know, what is it, 5, 6, 7 trading sessions, something like that. So just that breather has been a real bonus. Focusing on the pound this morning, we obviously had press conference type press statements out of the Bank of England last night. I didn't think that they would actually put a statement out, but they did. We went over it. We poured over it in great detail this morning. And to sort of like basically, I'm actually sort of moving into the area of thinking that the Bank of England is probably not overly happy with the new UK Prime Minister and Chancellor. I've got a feeling there might be a little bit of tension there between them, simply because they've come out, they've spent a lot of money. The pound has now been really shifted 8% in a very short space of time. And what's really key about this big move in the pound is it's not just the currency, it's all of the financial assets that are priced in sterling. And there's an interconnectivity there across a series of economies that affects the US and affects Europe and in Australia and all around the world as well. So it's not just an FX play. The Bank of England is now basically playing catch up. There's talk of emergency rate hikes. I'll be honest with you, I would be really surprised if that actually comes to fruition. If there is rate hikes potentially on the table, you'll feel that in the price action. The gilt market is looking like it's been completely trashed. There's bargain basement prices now in gilts. So if we do have rate hikes, I've got a feeling that'll create quite a notable demand for sterling, and that if we do get any emergency rate hikes, that's going to be sterling positive. Without it, I've got a horrible feeling that we're just going to rotate back to the downside and be looking, I don't know, back at those 105s, maybe even lower than that.
Wow. Well, at least we didn't get the emergency presser. We're sort of on our pins
Yeah.
and needles yesterday, thinking we may get an emergency presser from the BOE, and that was probably a good thing that didn't happen. We'll see exactly what do you think the timeline would be for an emergency rate hike? Just curious.
Well, I mean, they're just saying
Anytime.
it could be anywhere, any space between now and the end of the week. Should that happen? No, I don't think it should. Would it happen? I don't know. I think if the Bank of England did do something like that, it would be a sign. It would be interpreted as a sign of panicking. However, if they are unhappy with Downing Street, I think they could almost potentially want to send some sort of a signal, some sort of a shock, because there's a lot of cleanup work needs to be done off the back of these tax cuts. It has caused certainly a lot of turbulence in the markets, and if there is going to be something coming through meaningful from the Bank of England, meaningful in terms of an emergency rate hike, there's a lot of scope to do it. Bear that in mind as well. They have not been aggressive. It's not like the Bank of Canada. We're not front loading
Exactly
here
right.
in the UK. That is a completely different deal. So there is scope to do it. Whether they should do it or not is another question. But the journalists, the noise from the journalists out of the UK today has been all fishing for information, looking for the Bank of England to look for any traction on if there is going to be some sort of rate hike coming out from Threadneedle Street this week. I can't see it, but it would be ideally would be looking between now and the end of the week for something like that to come to fruition. But like I said, without it, more downside for the pound, I think.
Yeah, just a fantastic point. Oftentimes with the media, it's not necessarily what is being said; it's how it's being said. So
Yeah,
when you see just
absolutely.
a hyperactive media cycle, and we've had one in the United States for the past 3 or 4 years, so
Yeah.
it sort of becomes old hat after a while. Just real quickly, one of the things that I'm looking at today, and I know a lot of young traders are, is crypto. Very
Yeah.
surprised at how crypto's weathered the storm over the past 3 weeks, really since Jay Powell got involved and started ringing the warning bells saying, hey, global recessions are possible, unemployment's going to go up, we have got to get some sort of pricing stability. And when I take a look at what's happened with Bitcoin today, we're up
Yeah.
above 20,000, which is a pretty bullish move given this environment, this type of risk-off environment. And today it's important to realize about 15 minutes, 10 minutes, Jay Powell is going to be speaking at the Banque de France conference on opportunities and challenges of the tokenization of finance. So we're back. We're talking about those central bank digital currencies. We're potentially regulation. Nick and I were sitting here going, oh, when's the big regulation coming for crypto? And that is one of the key market drivers. So there's going to be a lot of folks in the crypto sphere watching Jay Powell and what he has to say about the potential of a digital bank, a central bank digital currency.
Yeah, I mean it's a really key thing. I mean, given the bear market that crypto has been in, I mean that Bitcoin moved today beautiful from 18,700 all the way up to where we currently sit on spot rate at 20,100. So that's a real sizable move from the market. But the whole concept of where we sit with the bear market now with crypto in general, I have got a feeling now that that we're going to see some sort of attraction now. It's getting to a bit of a decision point, and when the powers that be converge to actually sort of put a spotlight on it, you have to pay attention. For me, I am a Bitcoin fan of obviously, but I'm also a really big fan of Ripple. I absolutely love XRP. Their case with the SEC looks like it's now coming to a close. XRP, all of the other finance coins, XRP Stellar as well, and also XDC, they've all enjoyed quite a nice uniformed move together over the past couple of weeks. And I've got a very good feeling that because I know that from a couple of years ago, the Bank of England, when they eventually look at a digital pound, it'll be Ripple Labs that builds the technology. And there's a whole ecosystem of finance products underneath the surface that keeps the fluidity of money moving around the world. It needs replacing. The SWIFT network is old hat by blockchain standards, and something like XRP is built and designed to handle a lot of that kind of stuff. So it's going to be very, very interesting to see what comes out of the conference and exactly what Jay Powell will be saying today.
Yeah, I mean, it's a payment system of that nature just takes
Yeah,
international commerce to the next level, and I
yeah,
think that type of optimism certainly. I mean, take a look at last week's performance at XRP. You're looking at 37.5%.
yeah.
That even though you're buying something that's worth 36 cents, that's not chicken feed. 30
No.
36% in a week is fantastic. So a lot of optimism right now in crypto, and to be real honest with you, I'm a little bit surprised because there's so much angst in the shares markets, and our futures did fairly well during the overnight. I mean, you're holding on to some pretty good gains with your E-mini Nasdaq, E-mini S&P 500. Is this a dead cat bounce? I mean, that's the big question. Do we just get a little bit of a bounce today and then we continue down, or is this really the beginning of the end of the angst?
I really don't know. To be honest with you, I mean, I had a real eye on durable goods today. I was really like trying to understand exactly because we know that durable goods are as a lagging indicator. So all this front loading that the Federal Reserve have been doing, all these 75 every month, 75, 75, 75. There's going to come a certain point where we're going to need to measure that against something. Durable goods is a lagging indicator. It shows us exactly how the U.S. consumer has been feeling about buying those big ticket white goods items, your washing machines, your microwaves, your TVs. Those are the things that people, they don't actually spend that kind of money if they're really struggling. They'll make do for another year. So that barometer is absolutely vital. Now it came in slightly worse than expected. That's a slightly dovish play for me. That would essentially support equities as we go into the rest of the day. We're currently on S&Ps now. We're sitting at 36,096 just before the open. We're sitting within yesterday's range as well, and that is sitting at the bottom of Friday's range as well, just above support at 36.36. So if we do get a reaction from here, I've got a feeling that we'll have a little bit of a relief rally today into today's session, but it does depend on the on new home sales coming out in about an hour or so, I do believe.
Yeah, the new home sales is sort of a fascinating dynamic. I always call it a leading indicator because like you just said about durable goods, when those interest rates really start to expand, it puts pressure not just on the construction, not just on the building, for the financing for the building itself, but your home buyers. So you get a smaller pool of buyers. You start to see that trickles throughout the entire economy. Everybody from
Yeah.
loggers that are bringing timber out of the mountains. You see those commodity prices under pressure. So for me, it really does boil down to new home sales, and the big, not new home sales, but just home sales in general. The big story this morning was the S&P Case Shiller cooled. Let's see, home prices cooled in July at the fastest rate in the history of the
Yeah.
S&P Case Shiller Index. And I was in the home industry. I was a home builder for many years, and I can tell you that when those home prices start coming down, the entire industry gets a little bit tight. And
Yeah.
we haven't seen any retracement at all in home prices in the United States in over 2 years, really since before COVID. And that environment of easy money easy or cheap money. Let's say cheap money. Really kicked that industry in the tail. So when we start seeing numbers like we saw today out of the Case Shiller, do we get a bigger than expected pullback in new home sales later today? I mean, we're expecting 500,000, down from 511,000, so about a decrease of 2%. I think that number could come in a lot weaker than
Yeah.
we expect. So my eyes are on that. For me, that is a leading indicator of really a recession.
Yeah, absolutely agree. I mean, given the fact that mortgages now in the US, what are they, 6%, something like that? You're having a meaningful effect on house prices now with those interest rates. It's now starting to come through the system. We're seeing it in durable goods. We could potentially now see it today in house sales as well. So for me, I'm looking for that to be evidence of like, where are these interest rates going to start to bite the real economy? Now, currently, the housing in the US, there is that short supply. We still have that short supply of inventory at the top end. So until that's actually removed, we're not going to see a meaningful. There's still demand there for it, but the fact that mortgages themselves are over 6%. I mean, that's pressure. That's pressure on the system. And never ever forget that the housing market, it doesn't speak very often, and it's very quiet in the background, but when it comes and it speaks, and it roars like a lion. So beware.
Well, we had a positive open on Wall Street just a few minutes ago. We're up about 200 points here in the Dow. So, I mean, maybe we get a dead cat bounce. I'm skeptical here. We'll see if we can keep the bullish pressure throughout the day. Another big number coming out, CB consumer confidence, supposed to come in a little bit better than expected here in about another half hour. I think that could be a potential market driver. It's really hard to handicap something like consumer confidence right now. Typically, when you have high fuel prices, you're paying just a ton of money at the pump, and your inflation really is borderline out of control. I don't know how consumer confidence comes in a positive today, but the consensus is calling for 104.5 over 103.2. I call that an academic metric. I'm not sure we know what 104 means, but it looks stronger.
It's kind of strange though, because I mean, we've still not got any change in narrative from the Federal Reserve. We had Charles Evans from the Chicago Fed in. I think he was. Don't quote me. I think he was in London today. He's traditionally we would view him as being dovish, but he was pretty hawkish the way he was talking about. No difference there. It's like they're all on the same page. He said the appropriate to slow the pace of hikes at some point, although we need to raise rates further and hold the stance for some time. Not seeing softening in the labor market ahead in a way you'd expect in a recession. The Fed misjudged inflation and could have tightened earlier. And he's a dovish guy. So they are not dialing it down at all, and we're still not seeing anything in terms of like jobs numbers that reflects recessionary pressures yet. So until we really get those kinds of metrics coming in, it feels like it's game on still.
Absolutely. We're sort of in a state of flux as we complete the last trading week of Q3. I mean, Q4, I think typically you get some great action right up until the Thanksgiving holiday, and the December is sort of a bit touchy. I think we're going to see it all the way through New Year's Eve. I really do. 2022 has been a year for the books. So just looking at equities right here, we are catching some early bids here in the U.S. 500. Not bad action, really. Good participation. One stock that I've been looking at for quite a while, and anybody that's watched the live streams can attest to this, but this FedEx. This FedEx stock has been fascinating because we're talking about global recessions. We're talking about tightening interest rates. And when the CEO of FedEx comes out and says, we are going into a global recession, here's the trouble that my company is one of the biggest logistics companies in the world. And then just to see the epic, really downside being priced into FedEx stock immediately. Now I'm really concerned that maybe he's right. He's right. And when you get into those economic contractions, coupled with a hawkish monetary policy, where do all these assets go? It's going to be something we're going to find out in Q4. So.
I mean, the end of we're going to get a lot of flows as well from the end of Q3 today. I suspect that it's going to start today because it's not just month end we've got coming up; it's the end of quarter as well. And from being from a banking background, everything in banks runs on quarters, so we're going to get increased volatility from that. Not only because of what's been happening over the last couple of weeks with central bank policy and the various different things that have been pushing markets left, right, and centre, but we're also going to have all the flow from month end, which we usually get, and then we're going to get end of quarter as well as everybody rebalances their books. So it's a fantastic time to be in markets. What else can you say?
Absolutely. Well, we do have a few things coming up later this week. Nick, I think you have an engagement
Mm.
with one of the members of our room. Do you want to just brief us
Yeah,
on
yeah,
that?
yeah. We've got to say we're running a three-part series with one of our traders from down under, Mantis, a very skilled, very advanced trader. Been trading for well over 10 years now. He agreed to come on and do some streams with us, some interviews, breaking down his approach. He's got a really interesting, unique way of looking at the market, and what he's brought to the table already is this fantastic, really intricate look at how the Asian session functions. Because being from the UK and yourself being from the US, Jane, we don't really feel or see what that Asian session is like. Well, I never do because I'm always asleep. So to have that kind of perspective brought into the community and brought into the room has been absolutely fascinating to witness. He's also got his own trading system, the Mantis Claw reversal system. That's a strategy which works very well indeed. Very well thought out, and it's a great strategy that he's going to share with us on this coming Friday, and break it all down, do a real deep dive in it, and share that with everybody. So if you are interested in getting involved in that, obviously, please just log onto the website, join in, so you can sign up for a free trial, come and join in, and see exactly what Mantis has got to say. But yeah, it's been very popular.
Yeah, that's going to be good stuff. The Mantis Claw, I've been watching those trade ideas for quite a while now, since I've been here for about a year. So I'm really interested to hear just the methodology of really fleshing out a really structured strategy and approach to the markets. We also have our Academy to Funded Trader program. Our academy's going to be it's going live here in about the next week or so. So we're very much looking forward to that. We put a lot of work into it. We think it's going to be fantastic. And also our Academy to Funded Trader program, you have an opportunity to really go from no trading background, or maybe you've made some trades and you're sort of stuck and need really the motivation, or maybe just a kick in the tail to get going in the right direction. We have the Funded Trader program here. Nice evaluation process, 180 days. We're looking for talented individuals that are interested and committed to building a career in the markets, and the funding's there, 50,000 all the way up to 2.5 million. So we're excited about all this stuff. We've got a couple traders ready to go live, so it really is an exciting time with that program. Like Nick said, feel free to sign up for a free trial. Come on into the room, check it out, and see what you think. Kick the tires, take it for a test drive. That's for
Yeah,
sure. Well, Nick, is
yeah.
there anything else you're looking at today, or?
No, that's it. I'm kind of like I've squared myself up. I wanted to keep a very close eye on the gilt market, a very close eye on the pound. I am looking at gold intently because I am short gold, and I am very curious. And we've had CME opening just numbers overnight and not sitting the way that I was kind of hoping. But we get those preliminary numbers get turned into finalized numbers within about 30, 40 minutes, something like that. So when those numbers come in, I can make a firm decision on what to do with gold. But I wouldn't be surprised if we get some kind of relief rally in gold from here up into the end of the week, which also ties into squaring off positions at the end of the quarter. But that's the only other thing that I've got in mind at the moment, because boy, there's been enough to look at.
There sure has. Yeah, I'm going to take a peek at this FedEx gap, where we have a nice gap from 195 down to about 165. And in my experience, gaps get filled, and gaps get filled. So I'm going to
Yeah.
see if we can get a nice rounded bottom in on some of this price action, maybe for a day or two. And then also the Euro USD. There's a pretty good Fibonacci level up there, right around 97.50, that I think could be a potential scalping location. So that's what I'm looking at for today. Sounds like our plate's full, that's for sure. All right,
No kidding.
everybody. Well, it's been fantastic. Really enjoyed it. Thanks for stopping in. It's been our pleasure, and have a great trading day, and we'll talk soon. See you.
Take care.